The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, folks. Basil Chapman, Tiger Technicians Hour, the 16th day of April. And thank you to John Steve for many great hours here early this morning. And I hope I can continue that. Larry Pesavento comes up after me. I just wanted to show something here. I thought it would be a little bit of fun. We always do this in those periods where we have IPOs that are interesting. I'd never actually heard of Etsy. Still don't know what they do. But I kept seeing Etsy. Right now I can see Etsy on CNBC. It's up 18 at 34.76. So I thought, hey, how about this? Just to show the Chapman wave methodology. Look, it opens at round number 31. Oh, I love those round numbers. It dips a fraction to 31.80, and then it goes to peak A, pulls back, starts an inside buy signal to buy mode, A, B, C, D. Gives a down arrow with the technicals failing. And what does it do? It takes its longest time. It takes 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 28, 29, 30. On the 31st bar, it breaks out. That's the longest consolidation. What do you expect at a peak D? There's a possibility that something else could happen. Well, it just turns out I hadn't even seen this before. It was purely by chance that I happened to look at it. I'm always looking up the minutes, etc., the hours on the time schedule here at TradeStation. And lo and behold, it says ticks 1 tick, 10 ticks, 25 ticks. And then it says 15 seconds and 30 seconds. For years, I've been talking and joking about, I wonder when they're going to get to something less than a minute. Well, there it is. And what happens is that peak D still continued to have lousy technicals. And even though it snuck a little bit above that 31 opening price, 30.90 was the low, and went to a high of 35.20. That's 5 points. I mean, that's that's big. Even though it did that, look what happened. It sneaks to that E. It sneaks to that higher level, and that higher level can be thought of again as, look, there's an up arrow, and you've got A, B, C, D, unbelievable E, and now it's pulling back again. Chapman wave, very interesting. And now we can put in a down arrow because the technicals are fading. It could go higher, it doesn't matter, but it says that at that particular point, it just made a nominal new high with lousy technicals. Isn't that interesting? Maybe we'll follow it again. So this is a 15-second. Wow, that would be the shortest. That's not the shortest I've ever traded. The shortest I've ever traded is a split second. And I put in dozens of trades in those split seconds. That was the day that the market was down 1,000 points and I was off at tennis. Looked at my cell phone and said to my partner, I think I better be finishing at about whatever it was, 1:30. I need to get back. And we finished, and I got back home just in time to trade the move to the upside. And it was so fast that you had to just keep hitting the button, going click, 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 to go in and out, in and out. So I don't know what that would be. But isn't that interesting, a 15-second chart? And it does the same thing. Look, the technicals, there's nothing here that's different. And this is an IPO. Most techniques, you cannot even think of trading it until you've got a long history. There was no history here. It was 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. It was about a 12, 15 seconds. So it's about, 2.5, 3 minutes. Amazing. All right. Enough. Let's just get out of that. Let's give you the numbers. And the numbers are right now. Yes, Joe, you need that for the Nadex trade. That's for sure. Absolutely. So the Dow's down 6. And you remember my bias has been, since Friday's very good close, my bias has been towards the upside. all week. And that's not to say we aren't putting on shorts or trying to put on shorts or adding to shorts. It's just that the indexes themselves, especially the Dow, right now still have unfulfilled upside targets. All right. So the Dow's down 6 at 18,106. Let me just have a drink of water here. Aha. Very good. The S&P at this particular point, the S&P is at 2104, is down less than 2. The comp index is down 4 at 5,006. Gold is down 5 at 1196. I like the action actually over the last couple of days in many of the gold stocks. Gold itself is okay, but some of the gold stocks, and gold and silver, are actually acting way better. I think there's a little bit of room to the upside now as more of a buy and hold rather than quick trades. And I don't mean buy and hold intermediate term. I'm only talking about in this particular phase where the dollar is consolidating at a high level, but still consolidating. And that's my opinion right now. And even more important, I would suggest that that some of the silver stocks, even though silver hasn't participated as well as gold, some of the silver stocks are acting very well. I like that. All right. So, Jay and the Dan, we'll look at that in a moment. Let me just show you this, that the E-mini held this. I show this to my subscribers to my opening call every day. I show the daily and the 120-minute E-minis, but I also include most of the time the weekly chart for a very simple reason. The weekly chart has made a peak C1, C2, maybe it's a C3, yeah, I'm not sure. I think it's going to go to a leg D above 2109.75. And then we've got to be careful. That's just the way I'm looking at it right now. 120-minute, excuse me, showed it held support. That's that mini support over there. And it's now trying to get to the 2101-ish area, 2101 to 2103. Finally, if it gets there, you've got a little bit of security in that the 2097, 9-period exponential moving average in the 120-minute chart will be supported. Let me just move this away right now. We're going to go to some of the other indices. So as I said, gold is down a little bit, silver's down a little bit, platinum is down, but it's the high-grade copper that I keep my eye on. Why? Because it's been stuck in this range. It's had a narrow trajectory to the downside, held support at the body, the opening of this candle, the 20th, which opened at 2.6655, and it went down to 2.6685. That's the low yesterday. Nice move today, up 0.06, up 2.27%. That's very important. Oh, you know what? Completely forgot about that. Let me just write it down here. Particular stock I wanted to look at for today. Too late, but I did want to look at it. Okay, so high-grade copper is holding okay. It's not great, it's just holding okay. Now, this is going to be very interesting as far as I'm concerned. Two things are happening. One is, if you look at the TLT, the TLT is showing that that H pattern that I drew in the other day and said that there could be a second H pattern is in fact unfolding, which says two things. One is that if the weekly chart, tomorrow's Friday, I'm going to give it until Tuesday. It'll be intra-week, but it doesn't matter about it being intra-week. All I can say is that I said to subscribers this morning, I always, even if we don't trade some of the ETFs, I still have them in my traders corner as very good examples of what we're looking at. And I said 128 is really the important support now for the TLT, the Lehman 20-year T-bond fund. That's very important. Why? Because if it takes that 128, then you've got not just the H pattern that went to a lowercase m pattern in the daily chart, now you've got it in the weekly chart. And even though I'm suggesting that rates are really just stuck in a range towards the lower end, the Japanization of our bond funds continues, the Japanization of our bond yields. We could still just, be in that range and be up and down, getting everyone confused. I personally wouldn't have a trade on in the it's different if you're holding munis and you've held munis for a long, long time. I think we've gone through a very big period of city governments of improving, even though they're complaining about not enough money. They've improved a lot, and it might take another year, 8 months to a year before we start seeing trouble in the munis. So I still think that they're okay. Now, what's really important in this particular instance is if we look at the dollar is pulling back, kind of like the TLT is pulling back. A little bit of a different pattern, though. It's an inverse pattern. The one had the H pattern. This is the cup pattern. And this cup pattern says you can take that second arch and start drawing in another one. And that's a pattern we've seen. It doesn't matter what the instrument is. We've seen this pattern quite often. This is, you've seen the lowercase m form. You've seen the inverted lowercase 2u's, like a backward y, lowercase y, forming, like a cup and maybe a large handle. So this is what I'm looking at, and there's a potential for a double top in the weekly, yep. But I think right now we can just say that the dollar is acting well after that huge move to the upside, especially in the monthly chart. This is what you'd expect. And that if you're watching the euro, EUR/USD, that euro is going to be very important for two reasons. One is you want to see whether or not the euro is forming that M pattern that we were just talking about right there, right here. Therefore, it's time that it could have a little bit of a bounce, another lowercase m or arch formation. And we'll watch that. See there, that's just the inversion of the dollar index. And that's all we're looking at. Now, here's the other thing. One of the reasons why I believe that we've got a little bit of room left on the upside is this. If you're looking at the VIX index, the VIX index had a nice spike early this morning, but it's within the context of the weight of the 12s beckoning. And that says to me that there's a real good chance that tomorrow at Friday at noon, although it's options expiration, you could in fact, and you know, I'm sorry, subscribers, I just didn't have time to think it through properly. My thinking was that if the Dow Diamonds opened down, that a call option would have been fabulous on the Dow Diamonds. Might have worked out, I'm not sure. I think so far it looks like it would have worked well. But I had to think a lot about putting on that 300% long position. I really wanted to do it. The price would have been great just pre-market, but my thinking was that we are very focused on what we're focused on. I wanted to stay that way just for the moment and add only specific things because I think we're real close to some kind of a short-term top. I'll be back. Basil Chapman, Tiger Technicians Hour. We'll talk a little bit more about the VIX when I get back. Dow's down to S&P's down.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. Let me just finish this note here. Okay, a couple of questions I had. One was ZOES, which is at 34.40. Zoe's Kitchen. It's acting quite well. There's a lot of resistance in the 35s. So it really needs, at this point, it's a 34.40. It needs to get to 35.30s by tomorrow afternoon, maybe Monday. But it's got to do that without breaking under 33.73. It's doing okay. And let's put it this way. I like it. I think it's doing okay. But if it fails and goes under, if it breaks under 33.50 in the next 2 days, then all it's doing is going sideways. It's going to need more time. The monthly is improving. It's an IPO, but it needs speed. That's all. It needs the same kind of speed it had just recently. And if it has that speed, it should take out 35.30 and be on its way to 35.56 for a new recovery high, past that high that was made in mid-March. So that's that. And the other question I had is natural gas. Let me go to UNG. UNG, this is the start of something. It went to 12.49. This is the United States Natural Gas Fund. The weekly chart is slowly improving technically. No. It's improving dramatically technically, but the price is fading. I do not like to see that at all. That means if it takes out $12.30 to $12 support in the next week, that is just horrible news for natural gas. But if, on the other hand, by tomorrow or Monday, it pushes through 13, it's at 1294. If it pushes through the 13, this thing moves really quick when it moves both up and down. I'm going to say that if it breaks above 1335, that's a big move, but if it does break above 1335, all of a sudden the 1365 level of the 9-period moving average from the weekly chart becomes a focus. It's hit that so many times. It has not closed above the 9-period exponential moving average in the weekly chart since back in November of 2014 when it was in the 22s. And you know, often we've talked about the UNG. So yes, it's the start of an attempt. That'll help the monthly chart a lot in leg D to the downside. But let's do one thing at a time. Let's see if it can break into the 1330s, and it has to do it fairly soon. All right, here's the other thing I was asked about, and that was FEYE. This has been one of the hot stocks for a long time, up until January, up until middle of February, and it hit the 45s, plunged, or I shouldn't say plunged, it pulled back quite sharply to the 37.66 level, and now it's having a rally. It's a slow move up, and I'm going to draw this particular chart right now. It's more like a V, so I'm going to do the V to the upside. And what it says is, if correct, that there's going to be a leg D in April, or April to May, it cannot break under 35.30. Somewhere around there. Even if it doesn't close there, if it gets there, that's just not a good thing at all. But if it holds the support, especially the support at 40.80, the 200-period moving average, which is also the 9-period moving average, if it holds and it's able by Monday or Tuesday to get to 43, by early next week, if it can get to 43.30s above the previous high of last week of 43.28, all of a sudden, you're looking at something that has had a spectacular move from its IPO, going from the 35 area all the way to 97 in 3-4 months, and then it collapsed. It really did collapse and went from the 90s to the 20s, 24.81. So this is really this is the first move. This is the start of FEY, Fire Eye Inc. And if it does that, it means it's going to have a weekly chart that says left side, right side price time match would go from here. That's a little too soon to here. Oops, I should have done that differently. That's good. Right there. Okay. And that says if it does break to the upside, by the week of the 8th of May, it should be testing the high of 46.44. So I hope that helps you there. Quick question about WWE. I did that very briefly the other day. I don't think it was yesterday. It might have been the day before. I'm not sure. And what I said, there is just nothing here. It is just sideways to flat. And the technicals tried to rally, and it couldn't do anything. This is not a bad candle on the day. It's up 7 cents at 13.68. This is World Wrestling Enterprises, A shares. It used to be WWW, wasn't it? Anyway, it's WWE. And if it takes, I'll tell you how I would analyze it. If you're starting a position here, 2 things, and I'll tell you about them when I get back. Dow's down 7, S&P's down 9. I'll be back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Folks, Basil Chapman, and I'm showing you that 15-second, just 1 minute, 15-second bar chart of ETSY, an IPO that came out this morning, went to, look at this, it went to 1, 2, 3 peak DOEs and has pulled back from that level all the way. The high was 30, what am I looking at, 35.74. And right now it's at 33.69. About to do a left side, right side price time match, which says, oops, sorry, that's not right. That's over there. I have to just finish it up. I'll show you something interesting. That is going to be the support level. Let's see what happens. So it should come in about another, we've got plenty of time. We'll just keep chugging away, and we'll get back to this in a moment. It's always fun to be able to do these technical things live. No better proof of a technique than that. Now, we're going back to the 120 minutes. You see what I was looking at before? When the stock has a very sharp Grand Canyon slope, waterfall decline, and then within 2 bars after it stops, doesn't form either some kind of a doji or reversal candle, but instead continues lower, it says that the selling was not just a news-related thing, but there are some internal weaknesses. That's number one. So now what we're looking at is that WWE went from the 1740s down to the low of 13.01 on the 6th. It's only been able to rally to 1372 right now. So it had a little bit of a pop to 1399, but it's been in the 13s. Right at this moment, the 120-minute chart is technically improving. It's going to say, Paul, this is what I'm looking at, that if, and it's a big if, but it's a possibility because the technicals are improving, but it's failed to do it thus far, and it's been creating this kind of arch formation in the 120-minute chart. But if by the end of the day or by tomorrow, without taking out the low of yesterday, which was 1338, and it's at 1372 right now, WWE, if it's able to spike, it doesn't even have to close. It just has to show it's got the temerity, it's got the strength to get to 1388. Then all of a sudden that recent high of 1399 becomes a target. But more importantly, if it starts to hold by Monday or Tuesday, because it's managed to rally like that, instead of just continuing flat on the side like this, it's able to rally and get to 1421, maybe 1426 by Wednesday or so. All of a sudden, the 1463 200 period exponential moving average becomes a magnet. That's the only way I would look at it. Right now, it's a propellant. It's pushing the price away. The moment it breaks about 50% from this high to that, to the moving average, somewhere into that 1413, 1420, I'd say 1421 area, that's the best thing you could see for a bounce. And all I would say is at first you got to treat it as a bounce, but just don't stay in any trade if it takes out this recent low of 1301. All right, so that's that. Now the next thing that I wanted to talk about was, I wrote it down. Yes, I said I'd take another look at that UNG and the VIX. So the UNG, I made it quite clear. It needs to clear yesterday's high bar. It's acting quite nicely considering it gapped up and it's folded a little bit. No, it folded in completely. 1280 was the high of 1280 was the high of 2 days ago. And we went to a low today of 1279. We filled in the gap. That makes it important to say bouncing back to the 9-period moving average is good. I would suggest to you, if you're going to trade this, let's look at natural gas. It should have pretty much the same pattern. Yep, it has pretty much the same pattern. You don't get the gaps though. That natural gas made a D in the 120-minute chart, and now that 200-period exponential moving average is starting to act at 262, is starting to act like a magnet. You can see, because look at the way it spiked low this morning, and I think there was a high inventory. I don't know what happened. I saw something on CNBC, but I wasn't able to listen to it. And now it's come back, and this says, hey, the news was not as bad as everyone thought it was, so it came back like a cork in water. It's trying to be buoyant. So if you were to trade this, let's go back to the UNG. I'm not sure if you're trading natural gas futures or you're trading the ETN, I think it is. So UNG, but I'm going to go with the UNG. I would nibble at it right here at 1301. No, I wouldn't nibble. I'd start a small position, thinking that if it held and it either broke to the upside or it pulled back but didn't take out the low of today, it just pulled back, and by tomorrow it was already back at the 1303, 1309 area. That would be the way I'd trade it. So I'd start a small position. And that's a position that is a position that I would add to, that the money is dedicated now to UNG, just for the moment, because it has to prove itself. Only way it can prove itself is if it starts by middle of next week to tackle this bar right here, the bar of the 7th with a high of 1357, and then the next one is way up at 1366. I'd do this bar, the entire bar, which has a low of 1334 and a low of 1350 and a high of 1357. That's where you want to be. Why? Because you want to create some kind of a U or a V-shaped pattern in the, and just as we were looking at the V-shaped pattern a moment ago in whatever star, FEY was it? FEYE? I'm not sure. Anyway, you want to see this pattern, and you want to be able to, I can't do it just yet. I'll do it only to show you the technique that I would use. is this technique here where I use a plumb line at the bottom and I try to move it. I need to get into this bar here, right there. And that would say to me, if there is a rally, and I know that Steve has been talking about in his cycle work this week sometime, there should have been some kind of a bottom process. I'm not sure if it was this week or next week, but I know that he's been talking about it. And that says to me, let me just move this space to the right. Let's go to 9. Okay, this is very clear. This is saying if there is a rally in UNG, natural gas, it should attempt to get to the 1366 level, and that should be by the 28th of April. It's about a week and a half, yeah. So that's the way I'm looking at it. Because I can just tell you this, any failure creates another one. It is there are two fighting patterns here. One is the rising and one is the falling. All right, hope that helps you. Now we're going to go to something else. I had another question. Yeah, that was a text message. Oh, another question here is the VIX index. If I could be a little bit more specific. Okay, I'll be specific. You see the number of red candles? This is in the 120-minute chart. This is in the daily chart. This is in the weekly chart. That is being saying very clearly that the weight of evidence thus far is that the selling pressure in the VIX, which correlates exactly like a mirror image to buying pressure in the stock market, is telling me that the weight of evidence is red, which is negative, and that the green up bars are only momentarily up. It has not been able to establish on the short term or intermediate term, a little bit more so on the long term, but not in the intermediate or shorter term, a directional move that changes the tide going down. 1254 was the low back in March. 1251, 3 points lower, was the low so far in April. I would not be surprised if over the next couple of days we get to test the 1250s. That's going to be the big thing. But I'm really close in time and price and in many other aspects to seeing the VIX index start to rally. Now, does that close in time mean daily, weekly, monthly? It has to start off with a daily. And the daily says, even now with the Dow down 30 points, the S&P down 3.87, it's only up 17 cents, up 13.01, but it's still a red candle. It's the weight of the Dow. You see the technicals, how negative they are? And this is at this particular moment. By the end of the day, you can see them turn up, but right now, so that histogram, those red lines mustn't increase. You've got to start to see them decrease. Okay? So that's the way I'm looking at that particular instrument. Now, I'm going to also mention that the weekly chart, if the weekly chart closes under 14.28, it makes next week a really critical week for a couple of reasons. One is I still have some unfulfilled upside targets. You see, this is a peak C being made today if there's no new high from yesterday. But it's a very flat, and it's very, it's been making lower lows and lower highs in the Dow since the 18,288 all-time high on the 2nd of March. And when I spoke about it in February, I said end of February into March is going to be very important. But I wouldn't be surprised if even any selling pressure continues into April. And that was my contention. And the only thing that was most important in my work was whether or not there was a rotational correction which said that within the context of all these moving parts, you can sometimes take time rather than price as your consolidation mechanism. So far, we've taken time. Yeah, we've taken a little bit of price, if you want to call, 600 points, maybe 700 points, 700-point correction. 700 points is really not very much. And I'm still in the category here that says we don't need to necessarily make an all-time high in the Dow, but absolutely if we take out 18,107 in the next 2 days, and that rally takes you above 18,205, the high of the 23rd of March, that would be saying to me that then there's a real good chance to try, at least attempt to get to the all-time high. But the fact, you remember, I've spoken about this so often. I talk about speed. In a bull phase, you want to go as quickly as possible to the upside, and in a bear phase, you want to be moving as quickly as possible to the downside. Well, as I see it right now, what we've got is we've taken time. The S&P has a slightly different chart pattern than the Dow. Look, the S&P did not make a new unrecovery low. It's had an attempt to get to leg D, still holding very, very well. When you think about bear phases, the market now holding at -4 in the S&P, having been down -10 earlier on in the E-mini futures, is saying to me that there's still enough. The tide is still not quite complete to the upside. These residual waves that are showing that the tide can go a little higher. And that's what I'm expecting, that the S&P goes to maybe an E. I don't know if it'll break 219.59, the all-time high, doji high at that peak T. But it's held sideways and it's had, unlike the Dow, which has gone to lower highs and lower lows, the S&P has gone to slightly lower high, but quite nicely higher low. So it's narrowing, but this leg D did not break out like it should. So that's what we have to monitor. And I'm going to be monitoring it very carefully. Two things that are very important as well. One is that the MACD is at a very good level. Not great, but very good. And the stochastics at 82%, even with today's little bit of weakness. I see the weight of evidence suggesting that somehow or other we do push higher, all right, in the S&P and the Dow. Look at the IWM. The IWM has gone to a leg C. It could be an alternate count, but for now, I'm calling it a leg C, not a G/C, but a leg C. And the technicals are very strong, and it suggests that it should go to a D. Whether it does it tomorrow or Monday or Tuesday, I'm not sure. But even more important is that within the inside buy signal, remember I talk about this very often in the Chapman wave, you can get an inside buy signal, and that says after a sharp waterfall cascade, having made a new high or recovery high, there's a sharp pullback. And within that context, what you get very often is, oh, this should have been a different, I'm sorry, let me just change the down arrow here. Oh, that's interesting, isn't it? Let me just change that. It should be an inverted caret right there. Okay. It says that within this, normally in a shorter time frame, in a 120-minute chart, you would get a peak D, an inside buy mode that takes you to ABCD, which goes toward, right to exactly or just above the previous high, that all-time high, or the last major high, and then it starts to fail. Well, it went to D, but then it went to an E, and to an A, B, C, D, another one, very quickly, and it pulled back, and then it started another rally. And that rally right now, I have to call it G/E in the 120-minute chart. I'll explain a little bit in greater detail when we come back. I'll be back. Basil Chapman, Tiger Conditions Hour, Dow's down 27, down 3.5.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. The Futures Hour, next on TFNN.
Hi, folks, we're back. So during the break, I had a quick question from Jane. Wants to know, hi, Basil, another stock, MCP, is a penny stock, but they just got a big contract with Siemens Company. Do you think this has a chance to go back to 5? I bought some yesterday, 89. Thank you. Yeah, it's trading MCP, Molycorp. I think Dave White identified this way back when it was just a little a novice, when it came out back in 2010 and had a spectacular ride up to the 79 level. And then it dropped a little bit. It dropped a little bit from the 79s down to the most recent low was, let's say, 28 cents. Yeah, I guess I'd say it's a bit of a pullback. Well, it's had a spectacular move once, and now it's doing it a second time. This is what I think. Jane, if you've got it at in the 0.90s, if you had a 0.85, I would have a much greater comfort level, but that's okay. I think it's in play. That's the most, what you want to know. Is it in play or is it not in play? Well, as far as I'm concerned, the daily has made either a new leg B or it's a D/B. But most importantly, the MACD and stochastic are working fine. Yep, it's got the volume. I would suggest to you, if you've just got a small amount, treat it as an option. It's in play now, which says that even if it had to pull back, I don't know what you've got as a stop. You know, when I'm dealing with something like this, I'm inclined to say, give it a little more room. It's a penny stock at $1.01. The 0.60s is really, I get a little bit nervous, but I think it's in play. I think you've got yourself something here that says news is carrying the stock high. It looks like a biotech stock. And as long as there's news, I don't care if there's profits or no profits, nothing. News that it responds well to, that's what you want to see. I think you've got it here, and I suspect that it's going to have a big pop. Now, your question is, could it go to 5? No, I cannot even go that far. All I can say is the previous high back in October, the week of the 10th of October, was 163. Be happy, because if in fact it's able to go over by Tuesday, between Tuesday at 2 o'clock and Wednesday morning at 10:30, you want to see this have at least one attempt to break into the 130s. 128 to 132. That's really what you want to see. If it does that, then I'm going to say to you, let's go step by step. I'll put it on my list to be followed. And I suspect that the high that was made, the little peak that was made for 1 week back in October at 163, between 150 and 163, that would be the target, the next target. Go one step at a time. I think you've got a stock in play, and congratulations, you got it at a good price. So let's do this before you go to Larry Pesavento. It should be a fabulous show, as always, with Larry. Always love listening to it. Now, what I want you to just mention is, if the VIX starts to decline from here, it's at 1298, up 14 cents. By the end of the day, you can see these buying pressure and selling pressure, but with mostly buying pressure winning in the indexes since they've come off the lows. If there's another reversal late in the day that takes you down to the lows of the day, I would say that's not very good. If instead, even with options expiration, if there's a move towards the upside and the Dow closes the day, or at 3 o'clock is more like plus 25 than minus 21, and the S&P is plus 1.5 to 2 instead of minus 2, I would suggest to you that's very good action, and that early next week we should be looking at slightly higher highs, trying to go to the most recent highs in the S&P and the Dow. So that's the way I'm looking at it. If the VIX by the end of the day suddenly has this spurt and goes to 1335, 1341, somewhere in that area, 1356 is the 9-period moving average. I don't think it'll get there. But if it does have a spike, I'd say, okay, we're starting to see something a little different, as the VIX is determined to stay in this range and not break down under the 1250s. That's really the way I'm looking at it. My bias right now is for slightly higher highs over the next week, and then we're going to have to be very careful. That includes the IBB, includes NASDAQ, includes many areas. Thanks for being here. Have a great day, and I'll see you on Friday.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.